Hundreds of companies have quietly disappeared from the California marketplace, as well as some that have made the headlines. Schroyer says that a list of casualties from the California cannabis world is quickly piling up, and industry insiders expect more failures in the months to come. But the real question is who and when. These are just a few of the failure examples, the big name failure examples from the last 18 months. Northern California distributor and brand Flowcana, which ceased operations in early 2023, initially making a big splash in the run up to the 2018 market. Southern California multi-operator MedMen Enterprises began the gray market medical days in California and grew to become one of the first billion-dollar valuations after going public in 2018 before imploding earlier this year and filing for creditor protection. Magazine turned weed dealer High Times, which is now being sold off for parts after making a big bet on cannabis retail in California and then failing to repay nearly $29 million loan. Oof. One of the biggest and one of the largest cannabis distributors in California, Herbal, collapsed last spring under the weight of its own debt to vendors, leaving a huge trail of unpaid bills in its wake for business partners to swallow. Delivery company Grassdoor also closed down suddenly just before Thanksgiving last year, laying off all employees and began liquidating its assets. Who is he saying is next? According to sources, one such recent casualty is Southern California grower and brand Cannabis. Some of you may remember once upon a time, they tried to revamp the entire strain name landscape by marketing its flower names reflecting their psychoactive effects such as charge, calm, and other words beginning with C. They're done, an industry source said of Candescent after requesting anonymity to share knowledge of investor discussions. Company's website is inactive and former executives could not be reached for comment on this story. There's also plenty of well-known other companies, both plant-touching and ancillary businesses, that are obviously floundering and could be poised to follow others to the grave, industry experts said. Some of those include Lowell Farms, lost almost $3 million in the first quarter of the year, and nearly $13 million the quarter before that. State House Holdings asked Canadian regulators for a cease trade order regarding its shares on the Canadian Securities Exchange and has not yet reported its fourth quarter 2023 financial results. In the third quarter of last year, however, State House lost $17 million and had almost $300 million in total liabilities. Another delivery giant, privately held Ease, is facing foreclosure after defaulting on a $37 million loan. Gold Flora lost nearly $14 million in its first quarter of the year after posting $42.7 million loss for the 2023 calendar year. Company also has nearly $250 million in total liabilities. Ancillary firm WM Technology, the parent company of Weedmaps, has regularly over the past several years been posting multi-million-dollar losses. Last year alone, Weedmaps lost $15.7 million, and its dispensary and cannabis brand customer base is steadily contracting as California market has shrunken, just as mainstream platforms like Google and Yelp have begun listing licensed cannabis shops. Glasshouse Brands, one of the largest cannabis growers in the state, one of Jason's favorites, appears solidly funded with a good runway, but has been reporting net losses for quarter after quarter, including a $18.3 million loss in the first quarter of this year and a $97.4 million loss last year. Morgan Paxia, managing director at Poseidon Management, says that the common thread tying many of these failures together is simply bad business decisions. Here's what she had to say. Governance. That's what's really been challenging the quality of governance and management. The industry is so big at this point, you can't just say it's the environment. That's why the good companies manage through it. Even some of the bigger players that appear to be doing well are likely barely hanging on or are focusing on diversifying perhaps outside of California. He cited the global cannabis lifestyle brand Cookies as an example, which has heavily invested in Florida and even outside of the U.S., but hasn't appeared to have put as much back into its California operations. Cookies is really messy under the surface. It looks great on the surface because of the brand, but it's really convoluted structure of who owns that and who owns what. It's very, very disaggregated, it's hard to get a sense of corporate health. The bottom line, he says, is a lot of the big name failures were part of a bubble surrounding the industry, optimism in its nascent days, which led to major fundraising numbers, but not much in substantive business development. There were so many brands, they were everywhere. They were raising these monster valuations on nothing, and it was obviously a bubble. Cannabis is a great example. You remember talking with Adrian Sedlin in the early days, and you asked him what EBITDA was, and I don't think he knew what the acronym was. He was like, "We're Silicon Valley, bro. We're burning cash." Lowell Farms was like that too. All right. There's a lot of stuff. Jared Kylo has some good stuff in there too. Some good quotes in there. He says like this death spiral. We've all talked about. If we don't do this right, the failures are just going to create more failures. Kylo and others also noted that the regulated market conditions of California, which have been notoriously difficult since being implemented in 2018, following a long successful gray market area that began in the late 90s, have also scared off major multi-state operators like Forefront Ventures, Trulieve, Curaleaf, Slang Worldwide, and all of them have exited California over the past 2 years. Look at the people who left. You've got the big MSOs who've left, and they did not fail, but they failed to make enough money to stay. There's even more who gave up. Even the big ones like Jerry Garcia brand. Whatever happened to that? Whatever happened to Willie Nelson's brand? I can go on the list. There's so much money here, but let me go somewhere else. That isn't to say that there are no success stories. Grant Palmer on his Santa Cruz based retail chain is a good example of what Fun Canna's Adam Stettner tried pointing to recently about a decent number of small to mid-sized companies that are not getting much press attention but are executing nonetheless. There's also a handful of bigger names that despite the odds also appear to be succeeding, sources agreed. The most commonly cited example is LA-based Stizzy. The popular Jeter brand is another name that was floated. Others cited retail chains Embark and Soulful, distributors Nabis and Mammoth Distribution, and growers Fig Farms and Decibel Gardens as varying levels of California success stories. My question is this, is it so much that California retail market is failing, or are we just seeing a changing of the guard? I know a lot of my particular take on this is a lot of these bigger names that we saw that making all that noise early on, they had zero connection with the cannabis faithful, with the community, with the legacy community. And they tried to push people out. They didn't play nice. And California is all about weed for the people, is it not? If you're not doing the right things on the ground here, I'm just not. I'd say we're going to see more of a renaissance with small to medium-sized operators. They're going to be gobbling up a lot of the poorly operating retailers out there, and I think you're going to see them just as big, if not bigger, than these other big companies that left the state or that have gone out of business. I'm Rico Lamitte, the dopest dad on the street for High at 9 News. Happy Monday, everybody. Let's talk about it, man. What do y'all think about this this article in Green Market Report?
I say goodbye.
I mean, they're not wrong. They're not wrong. There is a lot of retailers are struggling. You know, when you look at it too from a tax perspective, you know, standalone retails are hit the hardest on 280E as far as any other part of the supply chain. Within cannabis. So, you know, the retail market is tough, not to mention you have the trap market that is alive and well and just eating everybody's lunch. So, I mean, this isn't surprising. And then like the points that you made earlier, Rico, is that a lot of those people that you mentioned had no real ties to the cannabis community or to the industry. And a lot of those people were hoping to make all of their money off of the new customer base that was going to come into the market because they were going to try to advertise to all these first time users, like similar to what was the flower company that you had mentioned?
Candescent.
Yeah, Candescent. Yeah. Oh yeah, we're gonna market. Yeah, we're gonna market to the stiletto stoners, and everyone wants to buy cannabis based off of a feeling. That's crap.
I mean, I'm a
That's
stiletto
total
stoner,
crap.
and I wouldn't smoke Candescent. I think it's interesting, and I think that it stuck out to me. Some of the brands that were listed as having moderate to okay success, like I'm pretty known for knowing everybody's business, and they're in a lot of debt and failing and going into receiverships, and a lot of those brands are doing maybe a better job with their PR team. Shout out to your PR team for hiding what's under your skirt, but
that's actually a really good point, Jenny Beth. That is a really, really, really good point, because a lot of these companies raise money based off of the fact of the different reports and things that they put out in the media. So having that part of your business really as a strong foothold can really be the difference between you getting that next $1 million funding round and not getting it.
Right.
Definitely perception of your business is a big part of what's going to come out and how much money you're going to get.
Perception's reality, right?
Perception's reality, and perception being reality has cost a lot of investors a lot of fucking money. So I think, I would just implore everyone to lift that skirt up and make sure that you're not about to put your money into a sinking ship.
Yeah, don't put your money into a bad bush.
A bad bush.
Did you say the bush under the lifted skirt with the stiletto?
Yeah.
I don't know where we're going with this, but
Yarrow, we've been waiting for you, Yarrow, to chime in on this.
I mean, I'm more of like a Birkenstock baker than a stiletto stoner.
Okay.
But I think part of what happened is with the legalization of adult use in the largest cannabis economy in the world, there was this notion that the only thing the industry needed was some people with MBAs and good basic business fundamentals, and that what was missing from regulated cannabis was discipline, acumen, and business know-how. And some of that is not incorrect, but the hubris with which those people from outside came in to teach and educate the industry about how to behave and how to transact and how to interact. And there was some good in that. The example of the good is the falling out of favor of the grow bro culture and the fact that we all reacted negatively to naked women lying on tables, having sushi laid out over them while companies burned other people's money. And so there was this idea that like, that's not where the industry wants to go. We need to normalize, we need to level up, we need to act like adults. But then there was this idea that like, just because somebody had been in the industry for 10 plus years was because they couldn't make it in any other industry, and that these people were going to come in and show us how to behave and to do well.
You're
and a
so
lot
right
of those people, they tripped on their own, you-know-what, and they came in thinking that they were going to teach instead of learn. And I think that was one of the biggest problems. The other big problem was this idea that enough of a war chest would solve any business mistakes, that it would give people an opportunity to make adjustments and to go, oops, because they had this war chest, which was going to give them more runway, more sustainability, more longevity than the lean and mean. What I really appreciated about this article, which was incredibly well written, and I've criticized this writer and I've complimented this writer, but like he named a lot of the really relevant people in California and got quotes from incredibly important people in California, Kylo, Praxia, investors, head of retail associations, and the example of Grant Palmer as lean and mean. I mean, I've known Grant for many, many years, and he's been very disciplined, very frugal, very smart, and didn't get caught up in any frothy enthusiasm. A lot of these MSOs just came in and said, we've got a big war chest.
We got all this money. We're going to do it better.
And I think it's that lack of humility, that lack of learning, and this idea that they were bringing instead of trying to learn and contribute that led to a lot of the decisions that cost investors a ton of money.
Well, they were trying to be culture vultures instead of trying to acclimate with the culture, Yarrow.
And the idea that if you did enough arbitrage,
you got to.
What's that, Rico?
I feel like you gotta approach this shit skeptical. I mean, that's what real business people do. You don't just like, it's like, oh yeah, we're good. You can't be like looking at everything through rose-tinted shades and thinking that everything's gonna be absolutely awesome. All of your ideas are gonna come into fruition. You are a fish out of water.
And shout out,
you're approaching the cannabis industry. This shit's been going on forever without you, and you thinking that you're going to change all the rules with no friends whatsoever. Like, good luck.
No new friends.
Well, then you're in California where you guys actually know what quality cannabis looks like and smells like and smokes like. So you can't just put money at it and think that you're going to produce a quality flower Like, money doesn't produce quality flowers. You have to have people that know what they're doing to actually produce great medicine.
Let me give you a great example. When Cresco did their launch party in California, they didn't have any of their flower at their launch party.
Well, that's because no one wanted their flower.
No, it's because their launch party was a hard date, and their grow and the ability to bring that California biomass to their launch party was probably a bit more flexible and or had delays in production based on construction or what have you. But if you were in adult bev, you would never have a launch party for a beverage without the beverage. Like, it just wouldn't happen in adult bev.
Well, I mean, in all fairness, Yarrow, just to push back on that a little bit, I mean, no one wanted Cresco flour in the first place. The Cresco brand sunk like a sailing ship, and no one ever wanted to order it because no cannabis retailers wanted to be promoting MSOs on their shelves. But
well, they acquired some grows in Santa Rosa, California, and they were smart enough to see quality and pay for quality and acquire quality. And to your point, Jason, nobody wanted Cresco flower.
No one wanted Cresco on their shelf.
What would their launch party have looked like if they came in just bam, bam, buttoned up and swaggy, and everything looked amazing, and the flower was off the charts, and everybody was like, holy shit. Like, there was an opportunity for them to impress.
I don't buy that. I don't buy that they ever had an opportunity to impress the community at all. I'm not buying that one. They may have had an opportunity to woo the community, but not to impress the community.
You know, the one good thing about all these MSOs coming in and dumping all this money into sourcing from other farms and things like that, before they lost their ass, is they definitely paid us out a bunch of money. So thanks for infusing companies that should be here with the money that you couldn't manage properly. You know, silver linings.
Fair enough. But shout out to the Suitor
I'd like to address the...
Oh, yeah, go ahead. No, please, go ahead, Matthew St. Germain.
Well, I'd just like to address the elephant in the room, and I'm sure that this is going to piss some people off.
Yeah.
I will say, before I start, there are a couple of exceptions. The biggest problem in the California cannabis industry has been the stores. It's the 215 model open to people without actual ball sack could get into the game because their uncle had a storefront and they had enough money to rip people off. Stores have been the problem. Stores have consistently underpaid people using, the Harborside or the Armenian pawn shop model. The stores have underpaid growers and ripped growers off. You as a grower would come in, and not me, man. I didn't deal with any of these stores in the 215 model because they're all bullshit. But my friends, I heard the story a million times. They go in, the store will talk you down about how your weed's crap. They'll give you their, shuck and jive about how they got to pay you. Like, in a month, they'll take your weed. And when you come back to get paid, then it's an excuse about how they got raided or whatever. And yes, sometimes they would get raided. Wouldn't have paperwork on the raids because the cops would just take their TVs and whatever product and money was there. But then the shops started to use this as an excuse to basically rip off growers. That model continued throughout the 215 until the legalization era. And then during the legalization, the 64 era, many of the stores kept doing it. And what they would do is just take everybody's money, not pay the distros, not pay the brands, and then move the license to another business or, dissolve the company, even the store, though the store would stay there. And then further proof of them enacting this model, the funniest part was when they moved the excise tax from distros to retail.
Just recently,
all these retails started to do the same thing to the state of California that they've been doing to growers for decades. The only difference is that California came in and continues to come in with armed agents and just scoop all of the money out of these retail stores. And so I maintain that the retail model has been the problem in California since the outset. Those who have stayed away from the retail model and have continued to craft excellent cannabis have continued to thrive throughout this entire period. And I agree with Yarrow and Jenny and the rest of you about the MSO guys. I had a million meetings with guys with a big watch, told me about how they were an entrepreneur because their dad or their uncle gave them $5 million and they were going to come in and show us idiots how it was done. And so it actually turns out that in order to craft and present great cannabis and not also get killed or arrested, have to be a pretty swift, smart, and intelligent mover. And most of us in the cannabis industry, there are, again, some exceptions, didn't come in with dad's money or family money or uncle's money. We had to do this ourselves. And what you end up getting is a scrappier, harder working, more intelligent operator. And those are the people that we're actually seeing continue to thrive, both on the smaller side on retail as well as on the trap side. Let's read that comment from Suitor Music, Jay.
Yeah, let me go into because speaking of that is a perfect transition to this comment from the Suitor of Music, who says, "Smoke small batch indoor living soil, so you can flex and say I smoke the best like Jason Beck." Yeah, shout out to the suitor. Yeah, shout out to the suitor. That's right. And all I have to say on that is, you run your stores lean and mean and be about weed for the people, and you should be all right. And after that, we're going to go to
pay your suppliers on time.
And pay.
Oh man, that was weird. Hey, you America. Do I look like Sean Connery?